Hello everyone and welcome to today's More Report on Friday the 27th of November with me, Richard Perry, Market Analyst at Hantech Markets. European trading sessions got off to a slightly disappointing start, slightly lower, and that's sort of come as a bit of a drift lower on Asian markets really. There was no real steer from, or no steer at all from the US because it was Thanksgiving holiday yesterday, but then overnight we had some slightly disappointing Chinese industrial profits data which put sentiment on the back foot in Asia, and subsequently all markets were trading slightly lower, and that sort of filtered through into the European session. In terms of forex markets, well, we are still seeing this sort of continued slight consolidation really over the last couple of days, as with the sorry, excuse me, as with the move towards Thanksgiving, which has taken a bit of the impetus out of these forex markets, where the euro is slightly consolidating. Although there is still an air of dollar strength pretty much through these markets, that any sort of moves against the dollar are used to as a chance to buy the dollar once again, and euro dollars being dragged lower, sterling dollar dragged lower, and also the gold price as well. Interesting that we are also seeing the dollar yen, which is disappointing to the downside. And it's interesting also to look at the treasury yields, because we're seeing the 10-year treasury continue to fall away actually, and that would suggest concerns over future growth levels. But even though we are still seeing the 2-year treasury yield remaining at high levels, which again would suggest that the market continues to factor in a rate hike in December by the Fed. So we are seeing these moves on these markets, which are, I think, quite interesting, but still the markets are fairly sort of subdued in light of the fact that a lot of traders in the States take a lengthened holiday into the weekend from Thanksgiving. In terms of the data that we've got out today, we've got the UK GDP data, the second reading of GDP for Q3. It's expected to come in at 0.5, which is in line with the first reading for the quarter. This is the second reading of last quarter, so unfortunately the Reuters don't give it in the way that I'd like it on the data front, but still the data is expected to come in line at 0.5% at 9:30. So that takes me on to my charts today. Now, I've noticed some interesting moves actually on silver in the last week or so. Now we've had this sort of consolidation sideways in the silver price in the last 2 weeks, but look at these momentum indicators. A buy signal on the stochastics confirmed, also a buy signal on the RSI. And the MACD lines are beginning to bottom out as well. So does this mean that we're starting to see the potential for a recovery? Now, if I zoom out on this daily chart, you can see that 1440 is a fairly big resistance, isn't it? It was acted as old support, although slightly broken late August, but still acted consistently as a support level, and now it's acting as a resistance. You can see the importance of this level if I zoom in here. We had pretty much an intraday low there at 1440, then a close, then an open. Subsequently, we've seen closing, intraday highs coming at 1440 as well. So this continues to be an important level on this chart. And if you saw I think a closing level above 1440, then that might start to see the recovery, and that would actually imply a bit of a base pattern, which would give you an upside target of 1495. Now, in terms of today's trading, yes, it has actually dipped. Has actually dipped around the open actually, which has sort of seen that test of 1440 just fall away again. But still, I think that there is the potential for this base pattern, or for this slight recovery anyway, or the end of the selling pressure, let's just say, as the consolidation has continued. Yes, it is lower today, but this is the hourly chart. But still, I'd say that the pressure is remaining, interestingly, sideways. No real downside pressure coming through this intraday hourly chart. You can see that the momentum isn't really that negative. It's fairly much neutral now on the hourly RSI, and also stochastics as well. So it's interesting. Could this now begin to show that we are beginning to set up for a bit of a recovery, or at least the end of the selling pressure? Now, obviously, we've got some supports in here. We've got 14 figure, which is the reaction low on Wednesday, and also Monday's reaction low of 1385. So some levels to work with there, but certainly it looks as though a bit of a consolidation. Could this be the beginnings of a recovery. Well, 1440 is that big resistance it needs to get through, so we'll wait and see. But I wish you good luck in your trading today, and I will speak to you later. Thank you.